Let me now bring on board Suresh Mahadevan, Managing Director and Head of Equities with UBS Securities, to talk about global mood, local mood and the UBS conference. Suresh, let's start with the UBS conference. The conference starts later this week at a time when the general outlook towards equity is negative and the outlook towards India is bearish. What are you planning to showcase?
See, I think, it's our MidCap conference, actually, which is a very bottom-up focused conference. It's actually next Monday and Tuesday in Bombay. So I think, it's our forum to bring some really strong bottom-up stock ideas. I think there are around 30 to 35, actually 35 companies participating over the 2 days, and it happens in Mumbai. So it's more a bottom-up stock picking conference. Where, I think I think India is a bottom-up story. So to that extent, I think this conference is critical in identifying some of the upcoming stars.
Suresh, hi, morning. However, how would you sort of explain the market volatility and downtrend that we've seen in Indian equities in the last few days? And would you say that it is the currency volatility which is sort of adding pressure to equity movement as well?
Yeah, I think, see, if you look at, the Indian stock performance over the last probably few months, I think Jan and Feb were very good, but after that, we have kind of slipped back. And I think, it's a combination of various things. I think the biggest swing factor for me, I think, is, the government's inability to do anything. I think, obviously we are still talking about petrol and diesel prices going up, but, luckily, I think crude has come off a little bit. That is giving us some respite. But I think the government is not able to push through policies. Obviously, the global events, particularly happening in Europe, has an impact because I think, the world is more risk off right now than risk on. So that is the second issue. And the currency is just, I think, a lead indicator because, we had a situation a few weeks ago where the currency had depreciated, but the markets had not. But I think it was inevitable that the markets also had to correct. So my sense is, I think the good news for India is, one, I think valuations are not very stretched. In fact, valuations are probably 1.5 standard deviations below the mean, which is a good thing. Second is we are not very over-owned, though around $200 billion have been invested in Indian equities. I don't think we are over-owned. I think people are probably still neutral on India, or maybe even underweight. I think my sense is maybe people are a little underweight on India. So those two are the positive things. On the negative side, we have all this bad news, which are, starting with government policy. Of course, the currency volatility hasn't helped because, in dollar terms, people have lost a lot more. So it's a combination of several things. And I think we need some positive catalysts for things to change. As you may know, we have been a little negative on the markets for the last few weeks, primarily around regulatory risks and, the effects. But my sense is, maybe the markets stay here or go down another 5-10%. That's a possibility.
If I look at the strategy report, you're not so hot on banks. Why is that?
See, I think, we have generally been fairly defensive in the last few weeks. And my sense is, I think we have private sector banks. I think, we are pretty heavy overweight on banks like HDFC Bank or Federal Bank. Of course, we also like SBI. SBI is in our portfolio. And, recently we initiated coverage on Oriental Bank. But generally, PSU banks, with the exception of SBI and Oriental Bank, we have not been positive on. And I think maybe after falling, they are rallying a little bit. But my sense is generally, I think, given earnings momentum is still kind of negative, maybe plateauing out, but still negative, and perhaps, also economic growth outlooks are getting revised. As you may know, a few weeks ago, we cut our FY13 forecast to below 7 at 6.8%. And I think now a few other houses are also doing that. So these kind of things, I think in a scenario like this, banks don't tend to do all that well. I think defensive banks will do well, like a HDFC Bank. So that is why it's nothing to do with and it's more about being defensive and less about trying to be very negative on banks per se, because I do think that, maybe valuations have reached a level where there is not a huge amount of absolute downside from here.
What about the overall market momentum though, Suresh? Does it seem like a retest of December lows is possible, or do you think the market from now on is, perhaps going to recover 10 to say 15% in the near term?
We are at around, if you look at today, I think we are at around 12.2 times, FY13 earnings. So that is a reasonably, good level for long-term investors. Okay, so that is number one. Number two, I think, if you look at, catalysts, I mean, I don't see many positive catalysts. I think it could come in the form of government action. If the government takes some decisive measures, I think post the parliament probably ending its session, the government is expected to at least push through some fuel price hikes, some of the other stuff. I think, some of the other reforms, then that could be viewed as positive. Okay, I think the government has, I think, quite sensibly delayed the implementation of the GAR, etc., which is at the margin helpful because, it at least shows that they are receptive to concerns raised by foreign investors. So I think this market would need catalysts, and in the absence of catalysts, I think it will continue to probably stay flat or drift down. I mean, at around 11 times earnings or 10 times earnings, India looks very attractive. So can India really test its December lows? Of course it can, I think, because, the rupee is already there. So I think, the stock markets can certainly test that. But I think, what could change this is decisive government action. And I do hear, whatever noises we are picking up from the press otherwise, it seems like the government might take some good steps. And I think that is what is going to be the catalyst for the market. So at this level, long-term investors should be buying rather than selling. Though the macro is pretty bad, I would advise people to selectively buy stocks.
Suresh, so if you are of the view that at the current juncture, it makes sense to be a buyer and the risk-reward ratio is in favor of going long, why are you recommending your clients to position their portfolios, defensively?
Yeah, see, we took the defensive call probably 4-5 weeks ago, and after that, I think the markets are down probably 6-7%. The currency is down another 4-5%. So I think markets are down another 11-12% in dollar terms, because mostly our clients are foreign institutional investors. So as I said, with the lack of catalysts, the market may continue to drift. So at some point, we will change our view, of course. But my sense is, the risk reward looks quite interesting at this point. I understand it's all gloom and doom from a macro or news flow perspective. But, as I said, markets are not overowned. Valuations are not really stretched. In fact, they are probably approaching fairly attractive levels. So I think it's time to start buying selectively, which is what we have been advising clients. And I think, should we really pound the table and buy India? Perhaps not yet, I think, Maybe we can have next 3 to 6 months of trading water. And after that, maybe with positive catalysts, the markets could move up. So our view is still, I think we're just advising people to be defensively positioned, but not sell, not sell and get out of India. But, a defensive portfolio will work between now and the time, maybe in the next 1-2 quarters. The defensive portfolio is probably what works best for, investors.
So, Suresh, give us some names as to how many mid-caps would constitute of that defensive portfolio that you're recommending right now.
Yeah, I think we have a few of them. I think, we have Exide in there. We have Coromandel in there. We've got Bajaj Electricals in there. We've got Federal Bank. So I think we have a few mid-caps, I think maybe 4-5 of them in that portfolio. But, these are strong bottom-up ideas as picked by the team. But, as a sector allocation, what we have got is, we overweight some of the defensives like consumers, pharma, certainly telcos, because we think the risk reward is still very good, despite, news flow being negative. And some of the mid-caps. And some defensive power like NTPC, Power Grid. So those are some names which we are really overweight on.
What makes you bullish on Hero MotoCorp? If I look at the dynamics of the two-wheeler industry, there is increased competition. Hero MotoCorp has a large base, and with the entry of Hero now, the competition in the two-wheeler space will only intensify.
Yeah, see, I think we are neutral on autos. We are not very negative. I think we are neutral primarily on. I think we have a little bit on Hero, and we have M&M in our portfolio. I think, we have it because these two are our top picks by the analysts in the whole auto space. And I think our analyst likes the name because I know some of the concerns are quite well understood that Honda is starting its own. After the split up, they probably have big plans for India. But I also think, it is the same argument against, say, Maruti and, some of the other names which you have come across. Look, the pie is still growing and, Hero obviously has a strong brand name, especially the models are very strong brand names. Their distribution is pretty good. So, we are kind of neutral on the whole sector. And within the sector, Hero and M&M are our top picks, basically, at this point.
What about Telecom, Suresh? Is that a good perspective at this point in time?
For long-term investors, certainly it is. I know the regulatory noise in the sector does not die down. I have been tracking the sector for close to 10 years now. And I think, just when you thought things are improving, the TRA comes up with yet another recommendation. But, leaving aside all that, I think, there is growth still left in this sector because rural India is still growing. That is number one. Number two, the stocks are trading at fairly attractive levels. That is Bharti and Idea. And I think number three, from this point onwards, I can't see how regulation can go even worse. In fact, it could get a little better with the new TRA chairman. And also, I think, a lot of the decision making is going to be left to the empowered group of ministers because we strongly believe the TRA recommendations were quite unrealistic and did not have much of economic logic. And my sense is that, while it's going to be an auction-led model, I don't think the reserve price is going to be as high or supply is going to be as restricted. Otherwise, the sector will just, plunge into a lot of litigation. So my own view is that, things could improve from here.
All right,
so we continue to like Bharti and Idea at these levels.
All right, Suresh, really appreciate your time and thank you for your good, strong and robust views.